Hey guys, welcome to today's trading day. Today's Monday with NFP week, also PMI at 10 a.m. and was able to trade today. Was kind of a difficult continuation trade, but still played out. Bit unfortunate stop loss placement right there. Got stopped to the tick, and then we just rallied higher and got to our external draw. Also continued trading higher. Was a bit painful, I have to admit, but still a good trade. I had really high conviction that we are going to draw higher, and was also super patient in here, waiting for really much confirmation. So that's definitely what I like about this trade. But yeah, let's break it down. Also about yesterday's opening range gap quadrant, so that's also quite interesting. But let's start with the daily chart. So what do we have? Wait, I have to remove this, that we see it on a daily chart. So that's better. So what do we see right here? We are kind of in difficult conditions because we have this huge day opening gap to the upside. But right now it's not really looking that we are going to trade even lower. So in that case, we have to adapt. For example, it was also the same case last week with Monday opening up higher and we trade lower. But in that case, we are still bearish. We still did not really trade or close a body below the external SSL liquidity. So it was obvious that we are still going to expand lower. Now it's a bit different. It's looking more bullish especially after Thursday. Definitely more bullish conditions. Definitely we can also trade lower with this week, but in that case, we have to adapt and accept the fact that eventually we are even maybe formed a short-term low in here and we see a hard time for retracement, or eventually even trade back to the all-time highs. But let's drop lower. So hourly chart right here was also still interesting, is obviously relative equal highs right here. Quite interesting. Kind of looks like a really terrible market maker buy model. But yeah, we are definitely respecting bullish in that case. Also was keen to see that Friday was possible to be a high time frame retracement, trade to the downside, swept engineered SSL liquidity, trendline liquidity, low resistance liquidity, and now we are basically able to trade higher. So you guys got interrupted, but Asia just traded higher, London New Open Kill Zone lower, also AM lower, scrap New Open Kill Zone SSL liquidity. We did not completely close in today's high time frame or new day opening gap, but that is enough. We see we really slowly traded lower. We engineered so much buy liquidity. We have New Open Kill Zone buy liquidity. We have London highs, but apart from that, you can see it's completely low resistance. It's like trendline liquidity. That's perfect. In that case, also yesterday's daily buy liquidity as well, right here. That's also something we can look for. And therefore it was obvious that we want to see higher prices. And what we see right here is basically still the quadrant levels of yesterday's new open range gap. So if we drop to regular trading hours, you can already see that we marked them out as well. That's also quite interesting and really important. Also right here with regular trading hours, we have equal daily highs right there. And we were respecting those quadrant levels, so that's really important. You can see already right here, we start respecting the levels also. In that case, then with CE right here, the wicks or the bodies fail to close below it after this aggressive push to the upside. After we scrapped also the buy liquidity right there. So if we want to go lower, we have to see now aggressive speed to the downside, but we do not see that. We do see that we respect the inversion of the gap right there, and that's really important. Why? Because it formed directly at CE. So that's a really important 5-minute gap, basically a balanced price range also combined with the down close candle and the up close candle, and therefore that's a really sensitive price level, and we want to see speed, and that's what we got on the 5-minute chart. In such conditions, we just have to be more patient. We have to keep a wider stop. It would have been completely possible to participate in definitely a really higher time from price run. So, but not always easy. But let's also drop to the regular trading hours chart right here. So there are a bit more quadrants which are also quite interesting. Today we do not have any important open range gap quadrants. So therefore we can also drop to the high time from 50-minute chart right here. So what I was also looking at, where I also took my first partial, is basically the high of yesterday, so of Friday's open range gap. That's definitely important to me, and a possible target would have been also CE right here. Yeah, so that's definitely something to look at. So now CE is also a bit different. That's also maybe the reason why we saw this short-term retracement right there, but yeah, respected right here, and then trade higher. So definitely also it's possible to look for the open range gap high right there, because it's completely, or it's perfect right here with the buy side liquidity. And yeah, I think we are still now rallying higher, and the quadrants levels right here are going to be next, I think, because that's just still a large inefficiency. So expecting short-term higher prices. But now back to the execution where I took this trade and so on. So what I was looking at is basically that we had a clean market maker buy model being in place. So we trade lower with the opening, swept NYOKZ SSL liquidity, and from there on really saw this aggressive rally higher. And then it's obvious that I want to trade a continuation trade. What do we want to see? We want to see that we trade back into a 5-minute gap, and that's what we did right here. So we used inversion for a gap in that case. We also had a clear CSD on the 5-minute. Yes, definitely we do have this large inefficient wick, which is really not clean to see, but in that case it's okay. But why? Because we only swept with that the SSL liquidity, so that's kind of a short run stops, and also with this aggressive move to the upside, we have already a CSD being in play. We have a balanced price range, so we don't expect that we trade all the way back to the inefficient wick, and that's why we want to be really cautious how we trade in here on a 1-minute chart. I did not really like that we closed below the inversion gap right there, but that's permissible, I think, on a day like today. We have high impact news at 10 a.m. We have really high resistance time distortion right here. Also NFP later, and also what we see is we trade back to the breaker right here, to the bullish breaker, also to the 9 for the opening price. That's also clean to see, and from there we saw this aggressive displacement higher once again, and that's where I know, okay, if we now can so then I wanted already to enter right here with the retracement back to the inversion for a gap, but I thought maybe I stay just a bit more patient and see if we can close above this right here. That would be perfect, because then I would completely confident in the draw. That's what we did. Closed above the down close candles right there, and then basically we saw this. We used this propulsion block right there, and from there really expanded higher. Still kind of with high resistance a bit, but I was really patient, really confident. I like my stop right there. Also, below CE, below the 8 for the opening price. Took my first partial right there, perfect partial in that case. And then I was too aggressive with my stop, traded below the short-term low right there. I first had it, I think, right here. So why is this fair gap so important to me? Because once again, it formed at a quadrant level right there. So at 0.875, and therefore because it formed right at a quadrant level, that's what we learned recently at ICT lecture. That's why that's so important to us, and I think it's also expectable that we see a short-term retracement also with 10 a.m. because the hourly chart needs to be there needs to be a wick to the downside that's like power 3. We see a short run stops, and that's why I got stopped right there. So I'm in that case the liquidity. I have to accept that, but yeah, my stop should have been should have stayed below right here, and then we could have completely rallied higher. We could have exited right there already at the midnight opening price, London highs, or even just hold for higher prices. Still, I'm completely content with the trade. So I really liked how I was patient right here. I think that was really perfect in that case. Yeah, I think I'm content with that. Hope you enjoyed it. You learned something new, and yeah, see you soon.